What is up, guys? Taiki here. I haven't made a DeFi video in a couple weeks, so let's go back to our roots and talk about the state of the markets right now. I'll also give updates on my MKR Thesis that I laid out a couple months ago, and then the emergence of DeFi 3.0. So let's get right into it. Slide deck expanded. State of DeFi. So these are the on-chain metrics. So these are on-chain DEX volumes monthly. And we saw in the 2020 to 2021 bull market, this parabolic melt up. 2022, like no one cares. We had some more activity at the beginning of the year when things like Lido started pumping, but ever since then, like no one's really using the chain. There's not that many opportunities on chain that's like worth spending money on, to be frank. This is the base fees for Ethereum mainnet since the merge, which was really 370 days ago. And this blue shaded reason is like when ETH is inflationary, right? So it's like no longer deflationary. And we're basically back to these levels that we saw like November and December of 2022 post FTX. If you're a bull, right? I mean, you can interpret it like a few things, like a few ways. If you're a bear, you can say, okay, like prices are much higher than they were post FTX, but the amount of activity on chain is the same. So like, doesn't that mean that Ether is overvalued? But if you're on the bullish side, you say that, okay, well, last year we saw a capitulation event. Now we're near fair value, and we have a few catalysts along the way, whether it be the Bitcoin ETF, the halving, Ether futures ETF, like whatever, like catalysts you can think of. And to be honest, I'm going to focus less on, I guess, like on-chain activity, because the simple fact is like no one's really like doing anything on chain. The on-chain opportunities remain dry. I'm full-time in this space. Like outside of being early into like friend tech and like being early into a few narratives, there's not that many things that a lot of people can make money on. And I don't really think it's, I think it's totally reasonable to like not risk your hard-earned dollars into smart contracts, especially when perhaps better opportunities exist in TradFi, whether it be AI stocks or even earning over 5% into certificates of deposits. And a couple weeks ago, I said, okay, like, are there any bulls left? This was like on Monday, I believe, and then the gas was like at 8 Gwei. And I haven't, like I said, I haven't seen this since post FTX. So it seems like we're like on chain is a desert, right? There's like nothing there, and maybe this means that okay, there's like more activity on L2s, right? Like base chain has friend tech and whatnot, but ideally you want this to be hovering above, let's say 30, for it to be like a healthy economy, and this way Ether is no longer like Ether as a deflationary currency, like that meme no longer exists. And like I said, if you can earn 5.5% in TradFi, then why are you risking, hundreds of thousands of dollars, like earning like 7%, right? Like that incremental 1.5% is not really worth the risk on like a risk-adjusted return basis. I'm not sure you can see this, but USDC rates are paying like 2.87%, that are 3.5%. It makes no sense, right? And this is me right now, okay? Like I'm out here, I'm like looking for my harvests, but they're all deprived of water, right? Like what the hell are these, right? Like this thing is cut wide open. There's like no plants. I am, very deprived of any like decent forms of yield. And what I've been saying for quite some time now is that until on-chain yields can offer something above 5.5%, like stablecoin yields, that's like safe, capital is just not going to find their way to crypto. And I think if DeFi doesn't fix this problem, crypto as a whole is pretty cooked. And there's always like the narrative of, like in the future, the Fed can cut rates. And like we have to wait for the Fed to cut rates in order for crypto to see a bull market. But then on the other hand, right, like from my perspective, if crypto people think that crypto, like all of finance is eventually going to be on blockchain rails, then DeFi as a whole and like crypto as a whole should be able to survive both low and high interest rate environments. And because we're in a high interest rate regime, like no one's using the chain, right? Like a month ago, I said, okay, like DeFi products are like just not good, right? They're pretty trash. So like no one's gonna use it. So how do we get people to use it? It just has to, like one way is to take these high yields like in the real world, like externally, right, off chain, and bring it on chain, and then maybe you can build a composable smart contracts applications on top of that to enhance value. And then maybe like distributing T-bill rates on chain permissionlessly, like that might actually be like a pretty good use case. And this is like what I mean by DeFi 3.0. DeFi 1.0 started like the 2020 DeFi boom, purely speculation. DeFi 2.0 was pure Ponzonomics, and then maybe DeFi 3.0 can be, a way for DeFi to become anti-fragile via real-world assets. So in a higher interest rate environment, well, it's okay because there are instruments where, people across the world can access like those high risk-free yields. But if we're in a low interest rate environment, then perhaps like all risk assets are pumping, and then like stablecoin yields are less important, and it's more about, okay, people want yield. What kind of financial engineering can we construct to give people that yield? And then, we can kind of see like an entire new bull market there. And, going back to my original point, DeFi, like crypto products just aren't good enough, right? Let's just be real with ourselves. For crypto and DeFi to survive, I think what we first need to do is to like bring external yields on chain and then build a product on top of it. And the simple question is there demand for people around the world to earn 5% on dollars? I think so. This is like the total TVL of real world assets. I know people don't like real world assets, like the term, but I think it kind of stuck. So I just think we have to keep using it. And another way of thinking about tokenized treasuries is it's kind of like yield-bearing stablecoins, right? Like, I mean, if people debating over there, they were so hyped up for Lido and like staked ETH, right? It's like, oh my God, like you can hold Ether, but you can hold staked Ether. Wow, like that's crazy. But now I'm saying you can hold dollars or you can earn yield-bearing dollars. Like, is it really a stretch to think that like this is not going to be an up-only sector in terms of TVL? Like why would you hold USDC or USDT in your wallet, not doing anything when you can stake it in DAI and earn 5%? I understand there's smart contract risk, and I totally understand. And like 5% is not the end game, right? There has to be like better things built on top of it. But I'm just saying that, like, for the past couple of months, I've kind of pivoted my entire DeFi thesis. I was looking for like on-chain perps and like things that can, like sustainable businesses, and then like volatility collapsed, like yields continue to climb, and I was like, you know what, like I'm wrong. Okay, like I'm just wrong. I just have to pivot like my entire like my model, like how I think about the world and like DeFi. And now I'm like fully into like this idea of real world assets and projects that can monetize things like tokenized treasuries are just gonna be like a really good hold. Or like if you can view it as a trade as well. And going back to Maker, I mentioned 2.5 months ago that this is like my choice to play the real world asset thesis, or like the narrative, right? So 2.5 months ago, I dropped this, or we dropped a research report on HFA Research, linked to the Twitter and the newsletter in the description below. But I also made a video like basically a little bit over 2 months ago, and back then Maker was basically $1,000. The Maker ETH ratio was at 0.538, but both the USD price of Maker and the ETH price of Maker has risen dramatically, up over 30%. And I do think that Maker will eventually put in new local highs. I do think Maker ETH has bottomed. I think the DAI supply has bottomed, and I think Maker USD has also bottomed. And let me just outline this thesis. I think it's a pretty simple one. I think people just like can't get over the fact that Maker was seen as like this down only asset, and they just like don't think critically around like, okay, like, well, like the story around Maker changed, so you should change your own like internal story. And that's, I guess, like the benefit of just trying to not be biased and whatnot. But Maker owns over $2.5 billion of treasuries, treasury ETFs, and cash equivalents, earning roughly 5%. With the interest payments, they're buying back their own token whenever they have like a certain excess profit, like a threshold. And this is the supply of DAI. We peaked at like roughly 10 billion, or like 9.8 billion, I think, in like March of 2022. It's been down only since. But I've been saying I do expect this to be the bottom. I think this is like roughly $4.4 billion. Now it's sitting at 5.5. And I do think that by Q2 of 2024, Maker is going to hit all-time highs in terms of supply. This is the amount of DAI that's being staked in the DSR, the DAI savings rate, and it's paying 5%. And where's the yield coming from? It's coming from treasuries. Okay, so they bought $2.5 billion worth of treasuries, and like every couple of months, yield or interest payments get paid out, and then they just bring that on chain. They pay people out. They also buy back their own token. So it's like the only project in crypto that has cash flows that's not directly tied to crypto economic forces, which 99% of crypto like relies on like Bitcoin pumping or Ether pumping to make money. But this one, like Maker, right? Like Maker doesn't care like if Ether is dumping or pumping. It's just gonna make money, right? Like every single week, every single month, like the same amount of money. And as long as rates remain relatively high, they're gonna be a cash flow machine. And I mentioned that in this type of environment where like there's like no one using the chain, If you're gonna hold something, I would rather hold something like Maker, even like over Ether, like in the short to medium term, just because it's like the only asset that has like actual like inflows, right? Like Ether, Bitcoin, like they don't really have inflows. Maybe like Michael Saylor buying, right? Or like, like the burn. I mean, like you know what I mean. And I think it's going to be a pretty interesting asset. So as I mentioned 2 months ago, the ratio was at 0.538, and now it's sitting at roughly 0.83-ish. I'm recording this video on a Monday, so it might change like whenever you're watching this, but I've been saying sometime that I do think Maker ETH, it's going to reach parity, as in 1 Maker equals 1 ETH, as like the dollar price of Maker and the Ether are going to be the same. And eventually, Maker ETH should get above like the one peg, I suppose. I mean, this isn't really like fundamental in any way. It's more of like a meme, but you kind of get what I'm going for, right? And no, like I don't want people to view me as like a Maker maxi. I'm just like a real world asset maxi. And I'm a believer that in order for crypto to reach like mainstream adoption, we can't just focus on creating products for like crypto bros, right? Like crypto bros, right? Like that's a limited market. We have to like somehow connect like the real world in like with blockchains. And only until that happens, I think people can actually start to see like the value of like these types of applications. So I don't really think we see like a sustainable bull market unless there are like consumer apps that people use. I think people are generally tired of like Ponzonomic stuff that like pump and dump really hard. I mean, I guess it's exciting, but if you expect like DeFi to be around in like 20 years, right? Like we have to create boring products like stablecoin, like yield, like like those types of products. Otherwise, like what the hell are we doing here, right? And even like my eat to earn video, right? At least it's creating like a way to build like a loyalty program or system using coins, using NFTs, and that way trying to build out like a better customer lifetime value relationship between restaurants and consumers and stuff like this. I think is like what I'm extremely bullish on. So even though I might sound like a Maker bull, like a Maker maxi, just because I talk about it, I'm like just trying to deliver like this idea that okay, it's a good project for these reasons, and with that framework, I also like these projects because they're good for these reasons. And the way I view Maker, right? It's not like like I mentioned, I'm not like a Maker maxi. I think one analogy that I think has been useful whenever I explain it to like my peers and like in my research, but this is looking at basically it's looking at the consumer staples sector, like in stocks, and like the ratio of like the average consumer staple stock, dividing that with S&P performance. And typically the ratio goes up whenever the economy enters a recession. And it's pretty simple, right? Like in a recession, markets prefer predictable cash flows. Like if you buy something like Clorox, they like make toilet paper, paper towels. It's not really an exciting business, but that like whatever the economy is doing, like people are going to be buying paper towels. But in a bull market, people don't care about paper towels. They care more about AI and like growth and like electric cars and whatnot. The markets prefer narratives and growth, right? And you can say this for the crypto. In an on-chain recession, right? Because I think on-chain is in a recession. On-chain is in a recession right now. In an on-chain recession, markets prefer predictable cash flows like Maker. In a bull market, the markets are going to prefer like hype stuff, and people are going to care less about Maker. So in a recession, buy Maker, hold Maker. In a bull market, sell Maker, rotate into growth. It's kind of my framework. But crypto moves fast, so chances are if you're watching this in like a month or two, maybe I have changed my tune. I have no idea. This is a typo. If on-chain isn't bullish, chances are Maker ETH is going to perform. And until on-chain is bullish, Maker ETH should grind up. And like I mentioned, DAI market cap to 10 billion by Q2 of 2024. And the reason I say this is because by Q2 they're gonna actually let's kind of just go over like this thread. So Ruin is the founder of Maker, and he's like, okay, like we are no longer a shitcoin. We are no longer a Ponzi. We make a bunch of money. Okay, that's kind of what he's saying. But by Q2 of next year, the sub-DAO tokens are going to launch, and this is part of EndGame, where Maker governance is going to still like transition into like AI governance. And that sounds super complicated, but like it's like basically like they give the AI like a constitution of the Maker DAO, and then whenever someone writes a proposal, like the AI will say, okay, like this is in line with like the constitution, and or it's like not in line with the constitution, and like that way it allows individual contributors to actually contribute without like the without like the baggage of like all the internal politics, and people arguing whether it's like it goes with like the constitution or not. But DAI and Maker, they're going to rebrand to a new token. There's going to be a redenomination of Maker. If Maker, for example, if Maker is trading at $12,000, then after the rebrand, you're going to own $12,000 units of new tokens. That's going to be worth $1, right? And then like both DAI and Maker is going to rebrand to like something that's like more similar. And Maker governance has scaling issues. One example is, if you're like a governance, if you're voting in governance for Maker, you're expected to be like a regulations expert. You're expected to be like a smart contract expert, right? Like voting on all these factors, like expansion, like internationally, like funding public goods, right? Like it makes no sense for like one person to like be an expert in everything, and like know what the hell to do. So some DAOs are trying to create specialized communities where Maker is kind of like the central bank of DeFi, and then all these sub DAOs are kind of like commercial banks where it creates like products and services on top of the Maker DAO, right? The central bank. And I think there's like and like in order for you to farm all these tokens, you either need to stake the new governance token, like whatever Maker ends up being, or like the DAI, the stable coin. And then people can self-select which community they want to be a part of, and that way you're trying to align these DAOs. So like Sakura DAO, I think they're a community. Yeah, it's a community DAO in Japan. I think Japan and Korea have like the most regulatory friendly regime, like when it comes to crypto. So they're trying to expand there. There's Spark, which is like the money market, and then there's like Quant, and I'll link this in the description below. But the reason this is bullish, I think I have it in the slide here. Let's go back here. So all these sub-DAO tokens, you need to stake DAI basically to farm them. But if you're staking DAI to farm these sub-DAO tokens, then it's no longer earning the 5% DSR, right? So in the future, right, like let's say like you can stake DAI to earn 20% or something, right? Like farming these things. Then there's going to be demand for people to convert their USDC into DAI to farm it, right? Like whether to farm it and dump or like farm and accumulate, whatever. And all like that new additional DAI, like all that backing is going to be used to buy T-bills with it, but the costs are going to remain low because they're actually not paying out the DSR. So it's kind of like the Tether business model where they just issue stablecoins and they buy T-bills with it and they like keep all the profits. It's kind of like that, and it's kind of I guess it's kind of like a pretty neat tokenomics element where you're basically expanding the supply of DAI via like more demand to farm all these sub DAOs, and in return Maker just like makes like infinitely more. Okay, maybe not infinitely, right? But like maybe their margins increase by like 50 or like 100% or something, right? I can definitely see that. And for that reason, right? And if you kind of think about it, right? Like the EndGame, right? Q2 is like when this launches. I think Maker is going to continue to have tailwinds into Q2. It doesn't mean that it's going to be like a good hold into Q2, right? It's September of 2023, right? Like I have no idea what's going to happen, but if people know this is going to happen, then I think there's like a reason to hold Maker, or there's like less of an incentive to hold Maker, especially when you know that buybacks are happening every couple of weeks, and there's like this pretty interesting like rebrand, sub-DAO farming, and coming from like one of the oldest like crypto DAOs ever, right? I think it's a pretty interesting experiment. I have no idea if it's going to work, but I'm all for it, right? At least like why not try? And then lastly, DeFi 3.0 update. And I guess I'll first touch on Maker, like the actual metrics. So the buybacks only happen when the system surplus is over $50 million. Right now it's below that, so it's no longer buying back the token. I asked Paper Imperium, who is one of like the most transparent like Maker DAO, like governance voters or delegators. He shares updates when it comes to like Maker governance, because to be honest, like it's really hard for me to track everything, so I just ask him like once a week or something, like it's like, hey, like what's happening. So I was like, hey, like do we know when more instruments are gonna hit the surplus next? Andromeda, Block Tower Andromeda, they're gonna return quarterly, so early October they should return a few $1 million. Clydesdale is another vault, and it pays interest income every couple of weeks. Coinbase custody pays like roughly early October. So it seems like early October is like when the system surplus will be replenished, probably like a few $1 million, which can go into buybacks, because this is the Clydesdale vault. Apparently they return money every 2 weeks. The last time they returned was like roughly 14, 15, 16 days ago. So, like this is due to have more money go back on chain. blockchain Andromeda, they own like roughly $1 billion of the treasuries, and it's yielding like roughly 5%. And if quarterly payments get issued on October, I would expect, like at least like $3, $4, $5 million. I don't actually like know the real numbers because maker reporting is like so bad, and like no one actually knows like what the hell is happening with these off-chain entities. But I think that's a risk that every maker holder has come to terms with. There's also a regulation risk, but I'm choosing to view that as a very low risk right now. But like maybe that's like me being naive. Right. So Clydesdale, they return instruments every 2 weeks. Block Tower, $1 billion treasuries, they return every quarter. And the annual fees here, so it shows 4 and 4.5%. So this is like makerburn.com, right? But this is actually like not like real. It's an estimate, and I don't have this like in front of me, but I saw like a paper that like looked into this, and the actual return of capital is like closer to 5% than like 4%. So you can even argue that this website is like underreporting the estimate of annual profits that Maker is generating. I think the real number is like somewhere between 70 and 80 million. Of course, it's going to change as more people stake the DAI savings rate. It's going to change as like rates change. But that's kind of like my general estimate. And the PE of 19 is I think is fairly valued. If you kind of view Maker as like a regional bank, it's roughly in line with valuations, but you can also view Maker as like the central bank of all of DeFi, and like the market to be the Fed, right? The on-chain Fed is much more is like much larger than like some random regional bank in like the Southwest or something. So that's what I'm tracking. And yeah, if you want more research, because I've been following this stuff really closely, make sure to follow HFA Research. We post Twitter threads 3-4 times a week. We also have a newsletter where we share our research. It's completely free, so I'll put the link in the description below. And if you also want to sign up for the premium Discord, link will also be in the description below. I post 3 weekly premium videos every single week, and you get access to a few hundred DeFi premium DeFi community. Right. So that being said, let's summarize things. So the current iteration of DeFi is not good enough. You can't just hope that low rates are going to come back and that's going to catalyze things. That's like purely hopium, right? Even the halving is a hopium narrative, right? It's like, like every 4 years, like markets are going to pump. I think it's more likely to pump than not, but like looking at it like rationally, like in a vacuum, like it's still like a hopium narrative, right? And I argue that in order for DeFi to succeed, it needs to create value in low and high interest rate regimes. DeFi just can't be like this thing that like pumps a lot in like a low interest rate environment. Ideally, it pumps in both high rate and the low rate environment. Maybe we crack the formula. Right? Maybe like Maker like just goes up in like a high interest rate regime, and then like we'll find other things that pump in like a low interest rate regime. And maybe this maybe DeFi is actually becoming more anti-fragile, and we're kind of just like seeing it in front of our eyes. I think a lot of people don't want to believe it, but no, it's something that I see. Because like this is Curve, right? You can LP for Frax USDC earn like 2%. Like what the hell? Like who's doing this, right? Who the hell is doing this? 3Pool, like 1%. Like who's doing this, right? I actually think like most of the capital in 3Pool is like what is it? I think it's like hackers. So like because like Tether and Circle can't freeze funds that are in like a Curve 3Pool. I mean like these rates are not good enough. And I think Curve stuff like Curve, I think is in a bit of trouble, and even like DeFi giants like Curve, I think cannot survive if they just like don't adapt to like the environment that we're in. And one thing that's pretty constructive is, and I mean I've been saying some time now that like if Curve doesn't onboard like tokenized treasuries, like they're donezo. But good to see that they are doing so. They're trying to create pools like CRV-USD, staked USDT, which is like this thing on Tron, right? I think only Justin Sun has it, so I don't really think it's a huge market. And then Curve USD stake DAI, so stake DAI earns 5%. And this is if you go to Curve and you try to mint Curve USD, you get this. And if they can, because like the only reason people like borrow CRV USD is like just borrow against their stake DETH and like farm with it. It's still like bleeding value. But at least if they onboard something like stake DAI, you can charge like a 4.5% borrow rate and put like a mint cap of like 100 million, and then people should like borrow it, right? So you can kind of arbitrage like the DSR to the CRV USD borrow rate. And if they get $100 million in borrows, like charging 4.5%, that's $4.5 million worth of revenue. And stuff like this needs to happen, I think, in order for DeFi, like all these projects to succeed. Because right now, right, I understand that tokenized treasuries aren't that exciting, right? I think a lot of people came into crypto when they saw my Polygon videos saying, oh my God, you LP in DinoSwap and you make a bunch of money. It's ridiculous. But now we're kind of back to this boring regime, which I think is fine. I think we're in this recovery phase. And it's just it just takes time, right? And not only Curve, other businesses as well. Why would you LP for USDC when you can LP for a stake DAI? It's not going to happen anytime soon, but it's more a longer term bull case. There's other there's other RWA projects. One is Frax, and this is the market cap of the Frax stablecoin. It's been down only. The recent decline in market cap is a little bit concerning. And as a FXS holder, I recently bought, and I am very very underwater, right? So that's very typical of a Taiki, right? I just buy something and I'm immediately underwater. And on the 20th, he mentioned that the audit concludes tomorrow. They've been teasing this for a few months. They just need to launch it, right? FXS is not going to go up until they launch this thing. But I think V3 is pretty interesting. So I did buy some, but I own Way Matchmaker, and I mentioned that before. And lastly, last week there was a Real World Asset Summit that happened in New York City. I did not attend, but I know some friends that did. And the organizer, Lucas, who, he's the event organizer, he mentioned that Robert Leshner, the co-founder of Compound, he also created a new company, Super State Funds, that focuses on tokenized treasuries. And he argues that, I think RWAs are just going to be one of the most exciting narratives when it comes to crypto. But before onboarding things like commodity stocks, real estate, and plus liquid assets, I think step one needs to be creating on-chain stablecoins. So start with boring assets like T-bills or other stablecoins, right? And then create a value prop, right? Highlight the use case of mainstream assets. And then, after tokenized treasuries hit $100 million in TVL, let's say, more complex products can become popular later. So, I hold Maker because I think they're basically the poster child of this narrative. I think it also makes sense to look into other assets. If you expect Maker to pump, or maybe not pump, but outperform and hit parity with Ether, then chances are there's people are going to be oh my God, I missed out on Maker. I need to buy something that's a low market cap that pumps harder. And then you kind of get this mini micro narrative rotation season. I'm focusing less on that and big, focusing on the big caps because they're more liquid. But I think it makes sense. For example, CANTO, I know this thing was super hyped at the beginning of the year, then it's down 90% or something. It's down bad. But they're also trying to create a T-bill product. It's basically the same thing as DAI. So this is something I'm watching. But like I said, until these things launch, it's pure narrative. I think in the current market, pure narrative, it doesn't work. You kind of need narrative and actual flows. Maker has that, right? It has a narrative of RWAs, and it also has the flows where every couple of weeks, millions of dollars flow on chain. And then it goes back to buying back your token. So if you buy Maker, you're basically being subsidized by the US government. So you have a less chance, you have a lower risk to lose money on Maker. It doesn't mean that you're not going to make, you're going to make money. It just means that, buying Maker has, you get what I mean, right? It's more of a player versus environment token, because there's external flows that will buy Maker at whatever cost, as long as the T-bill strategy remain profitable. So that's gonna be it for me. Let's see how long this video is. Okay, half an hour. It's pretty good, not bad. I think that's about it. Yeah, I don't know. Let's check prices. Pretty cash. I literally bought FXS here, right? Somewhere here, right? It was pretty bad. But at least Maker, right? At least I was kind of early to Maker. But I do expect Maker to hit local highs, and then you kind of have to think about, if Maker continues to go up, then what will other crypto participants want to chase? Is it going to be things like FXS? Is it going to be like new launches? It's like, you know, like randomly like CANTO. I have no idea. But that's where I have my eyes on. And you know, I guess like one beauty of like this stuff market is there's like not much going on, so it's like not that hard to like keep track of like upcoming narratives, right? It's like, you know, Frentech, cool, that made sense, I guess. Maker makes sense. Like what's next? Okay, like, you know, like eyes, or you know, eyes on the ground, like ears on the ground. Like let's look for this stuff. But you know, I also understand if like Maker is like not interesting. There's like nothing wrong with like holding Bitcoin, holding Ether, just like waiting for, like, you know, not trying to take on too much risk. I also totally understand that view. I don't really blame anyone that like thinks Maker is, the Maker thesis is like mostly played out. I think it has more legs, but I could be wrong. I've been wrong so many times that, you know, you don't need me to rehash that. So thank you guys for watching. See you guys another time. And yeah, check out the premium Discord if it's interesting to you. Bye bye.